Thank you so much for joining this presentation, and I really appreciate your coming. And we are going to talk about a very, very important topic, and this is understanding your credit. So, what is credit? Some people ask, what is credit? So, in this country, credit is the ability to borrow money or access goods or services with the understanding that you will have to pay that money back. So we have three types of credit. We have revolving credit, we have open credit, we have installment credit. And this, you have to understand how they work. So the revolving credit is that it's automatically renewed as debt are paid off. So the most common example of the revolving credit is the credit card. And I believe in every household here, they have a credit card. And the credit card, every month you have to use and pay. So must pay a minimum balance each month. If you overused it, at least make sure you have paid a minimum payment that is set for that credit. And the revolving credit has a credit limit. Some people have 300, from 300 to 10,000 to 15,000 to 20, depending on your financial history. Any balances carried from month to month will incur interest that needs to be repaid. So if you have balances that will cost you interest, please pay that, because at the end it will hurt you more financially. So the credit impact is on-time payments and delinquent payments are reported to credit bureaus. Then we have the open credit. Open credit require full payment for each service period. Typically, it's monthly. Most common example are home utilities, which is the heat, electricity, water, and phone. And most families have some form of service credit for their home. So in this case, the impact is most utility companies, they do not report on-time payment to national credit bureaus. At least they give you a leeway because they don't want to hurt your credit. Delinquency is reported to collections and it can negatively impact your credit. And then we have installment credits. Installment credit is a loan for a specific amount of money that is repaid within a set time period. Most common examples are car loans, mortgage, student loans, payday loans. Payday loans, I never knew them, but they are there. And then pay interest on the loan as you go. If you have a huge amount of bill, make sure you pay interest because it's gonna hurt you more. This installment credits cannot increase the amount of the loan without refinancing as compared to the credit card. The credit card, you can call the company and tell them to increase your credit limit. If they gave you 10,000, you can tell them, hey, I need to increase. Can you increase another 5,000? So it keeps on increasing. But it will only increase if your financial history is good, is clean. They look at it and they say, yeah, your worth increase. So the impact here, the credit impact here, reports on time payment and late payment to credit bureau. Contribution to credit mix, which positively impact your credit. So we have a credit report versus the credit score. These are two different things, but they are connected. So the credit report versus credit score. Credit report is the history of your financial life, and it tells the story of your finances, how you manage your finances, how you handle money, big money, small money. Are you a good person to deal with money? And then credit score is a snapshot of your credit financial life. Numerical score or a grade that represents your level of credit risk to potential lenders. The higher the score, the lower the risk. So then, what is your credit score? If you have never checked your credit score, please do. If you have a bank, there is a VICO score down there. You say, check my credit and see what's the number. What's the number that, is it low? Is it high? So the three major credit bureaus collect your personal and financial information and compile it all into your credit report. So this information is gotten from out there. You can request your free report from them or from the annualcreditreport.com. Just request. This is free. When you request this, you get to know where you are as in your credit report. Sometimes you never know. You might have things that are on your credit report that you don't know. So get to know. And then what is your credit score? It's a grade given by credit bureau measuring your credit worthiness. It's determined by your credit activity. Credit score range from 300 to 850. And this is linked to your social security number. So take care of your social security number because it determines a lot of things, not only credit scores. And then we have the three major credit bureaus, which is Experian, TransUnion, and Equifax. This one, they work together, like the numbers of your credit score are relatively the same. Most of it can be the same depending on how you manage your money, how you deal with your finances. And then credit score model. We have models that the credit bureau use. So there are two major credit score models, which is a VICO score and a Vantage score. The models use complicated mathematics to evaluate your worthiness to receive credit. So the VICO score and the Vantage score are the one which determine what's your number that will be attached to your credit score. And then you go put it from Experian, Equifax, or the other one, the three ones. So, but how is this determined? How credit score is calculated? How is it calculated? What determines your score? So, number one, we say there is a payment history, there's a credit use, there is an average age of credit account type and credit mix, new credit inquiries, and you see what affects more is the payment history, which takes 35%, And then the credit use, 30%. The other one is 15 and the other one is 10 and 10. So take care of the bigger portion. What does that mean? How is your credit score calculated? Payment history, 35%. This is a bigger portion that affects your credit positively or negatively. So keep track of all payments, late and on time. You can stay on your credit report for up to 7 years. If you don't make your payments and it's sent out to the collections, that report affects you 7 years. Mostly, bad credit is what is sent to the bureau and that affects you. You get stuck for 7 years because you didn't pay this bill or that bill. So be on top of the game in paying your bills. But how can I avoid late payment? Because sometimes we forget, sometimes we change banks, we change cards, we change what? So select a payment due date that works best with your finances. Because some people are paid once a month, some people are paid twice a month, some people are paid weekly. So you choose. If you're paid once a month, choose a day like, okay, if I'm paid this day, then 2 or 3 days later, my bills go out because now the money is in the bank. But if they come and bounce, they are not going to remind you that this bill has not been paid. It will wait until next month. It will come and bounce twice. Come and bounce 3 times. Then they switch you off, send you to the correction bureau. And then that there affects your credit. So select a day that works for you. Set up text alerts and calendar reminders because we need to be reminded. We have a lot of things going on. Set up automatic payment to pay the minimum. At least make sure the minimum has been paid, but it's advisable. Once the minimum is paid, go there and pay over the month. Just make payments on your card throughout the month so that you reduce that and keep your balance low. When you keep your balance low, that means you are a good manager of your finances. How is your credit score calculated? Credit use, we have come from payment, which is 35%. We have come to credit use, which is 30%. See, those two are the bigger portion. Keep track of the percentage of available credit you are using. Your credit utilization should be less than 30%. If you have like 10,000, range in using 3,000 and not more than that. Some people have 10,000 in credit card and they go swipe. Oh, I've used 10,000. That affects your credit completely. It will affect your credit and bad credit here, then you're done. And then how to keep your credit utilization. That means that's what I explained actually. If you have 10,000, just use 3,000 range. Then as you swipe, make sure you go pay. As you swipe, go pay. So keep your utilization right below 30% of the credit limit. Pay off your balances more than once a month if you have overused. Like, so if I can give example, if I travel maybe out of country with my kids and I have a credit card that is 10,000, when I swipe to buy the tickets, it takes like 6,000 straight. That one day, that money is gone. I have to work hard to keep on paying it over the month to make sure I've brought it up to either 10,000, pay it fully, or just make sure it's below 30%. So if you don't have enough money in that credit, you can request the company, tell them, hey, this money is not enough. I tend to use money. So can you increase my credit limit? And they will look on how you've been spending. Because sometimes you have maybe 5,000, you go do shopping here, you do here, you swipe, you have swiped 3,000, that affects your credit. So if you talk to them, tell them, this is very, very little. Can you increase? Because you see, they will go 6 months to 1 year and see how you have been using your credit. And then they will either, depending on the score now, they will either increase or they will decline. So avoid closing credit cards. I can give a little story. When I came to this country, I didn't know. Nobody taught me. And that's why I said, the things I've done, I don't want them to affect people who are innocent. That's why I bring this information and training and teachings out here so that our people can know. When I came to this country, and then I had my own address. When you have the address, you get all these mails coming, pa, 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 pa. And then you open, they say, oh, you have approved, you have been approved for a credit limit of 300, and this one is 500, and this one is, and I say, oh, I can activate all these cards, and I start using. I did that. 3 of them, one 300, another one 500, another one I don't remember how much it was. And so I started using. That was my first time. I didn't know. Me, I thought it's just paper money that has come. As people say that America has got money, so I said, I got it now. Then I swept. 2, complete, finished. I'm not paying it. So it affected me so dearly. So when I came to learn, I was supposed to swipe, pay. So finally, I learned the hard way. That is why I'm training this. And how is your credit score calculated? So the 15% goes into the length of time you've had the credit. Like now, I said when I came and then the mails came, within 1 month, I've activated, I've used it, and I'm like, oh, okay, now I can go swipe, I can go to the store, buy clothes, I can do this, I can do this. It's gone. 3 months, I'm in debt. I'm like, now mail's coming, you have to pay. You overused, you have late charges, you have all that affects. And I ended up closing those credits. I said, close it. But we say, don't close if you have a debt. Make sure you pay it fully before you can even talk to them and tell them maybe to close. But don't close. It affects you more. So the older the account, the better. The older the account shows your long-term history of responsible financial management. Yeah. So put the card on autopilot. Keep the card open and put a small recurring charge on it to keep the issuer for closing it due to inactivity. So, running the hard way again, once I closed it, I said I'm not going to apply for another, I'm not going to have any credit card. So I can go to the store and buy stuff cash. I was wrong. Because when you have cash, you go to the store, they ask you for a credit card. They run your credit. If you are buying something that they have to check your financial status, and if you carry so much money to the store, they start asking you, where did you get the money from? How do we know that that is good money? because they don't know maybe you're selling drugs and you're putting money together to go use it. So it becomes very difficult. In this country, you have to have good credit. You are better off with no credit than bad credit. So use autopay or calendar reminders so you do not miss a payment. Because when you miss a payment, there is late fee. When you overuse, there is overspending fee, which is mostly way more than even you think. So, and then credit mix, if you have 2, 3, like I told you, they send me this, and that. Those were the testing. I was on the test table with those 3 credit cards. If I had gotten this kind of information, and then I know this 300, I will use this to gas my car and pay it off. I will use this to buy my groceries and pay it off. I will use this maybe to buy clothes and my personal belongings and pay it off. That is how we are supposed to do. If they give you 300, don't think that that is little money. Use it and pay it off. Use it and pay it. I could have used that, and then much later, after 6 months, now my credit is good. And then after 1 year, I will tell them, this is small money. Can you increase? And that's how your credit card keeps on building, following your habits of financial spending or management. So your credit mix is how many different type of accounts you have open. A variety of accounts show lenders you are responsible in managing multiple accounts. If you are out there, please, and you don't know this information, and probably you don't have a credit card, that time you have a credit card, use pay. Use pay. Because if you do what I did, it's going to take you a long time and you will be having hiccups on, everywhere you go, they ask for credit. And then we have mix of loan types, whereby if you have a mix of loan types, such as you have a credit card, that is a loan because that's somebody's money that you are using and paying it back. If you have a student loan, you have auto loan, you have mortgage, that is that, and you manage it well, then your credit will shoot like just in no time. So it shows lenders you can handle multiple payments at the same time. If you have this one, make sure you are paying. Because if you have like a credit card and you are not paying, you have a student loan and you are not paying it. And if you want to advance your studies to a higher education, you go apply for another loan, they will look back. The loan we gave you, how did you pay it back? And that would decline your application. And if you wanted to go to higher studies, now you are stuck. So please pay your bills. So, and then we have new credit card inquiries. The inquiries you make, like when I realized the mistake I did, I paid it off and I closed it. That was wrong. I could have paid it off and keep it up. But I just closed them. They sent me bills, and I paid it off. And that was it. I thought that was the good thing I did. No. So later, when I had understood, I said, let me go and get myself one credit card so that I can start building my credit. When they run my scores, like they have to run in the system and see, are you worthy of what you are asking? That is the inquiries I'm talking about. If you go to buy a loan, they run, that's another inquiry. If you go to rent a house, they run, that's another inquiry. That is called hard inquiries. That is when you are applying for a new loan or a credit card. That is hard inquiries. And that affects your credit more than ever. They say don't inquire about you, don't do inquiries like for 2 years. Stay away from doing those inquiries. They affect your credit. And then we have soft inquiries. Soft inquiries are the credit check for renting or an apartment or getting a job. Those are soft inquiries. Sometimes they don't affect your credit so much, but they show. When they show in the system, they will show like if you applied for an apartment and you got, and then they show this is for good cause. So it doesn't affect that much. Like when you are going to buy a car, you are looking for mortgage, school, credit cards, that is. Okay. So credit score, we have FICO scores. FICO score are used in over 90% of US lending decisions. 90%. Wherever you go, whatever you want to do, that is what is used. You have more than one FICO score. And then your FICO scores are calculated from the credit data on your credit report. So FICO scores have been an industry standard for over 25 years. So it's been a long time. So this country is based on credit. What's your credit? Some people ask you, what's your credit? And you don't know the number. You say, I don't know. Sometimes when it's bad, you say, I don't know. But when it's good, you say, oh, my credit is 710. Oh, my credit is 850. So you do not need large income to have high FICO score. But a high score will save you money. So, like I can say, back in the country, back in Kenya, when you have money, you can go and take that old money and do what? Pay cash for your new car. You can pay cash for anything. They don't run the credit. I don't know about today because I've been out of the country for many years, but here you come with that big money, you say, I have money, I want to buy this. They will say, no, what's your credit score? We want to know what's your credit score. And as I said, big money cash is rarely the companies can take cash. You either write a check or you do some money orders or some stuff, but they have to check your credit. It has to be checked. So take care of your credit. So you have more than one FICO score, as we said. Different credit bureau use different combination of your FICO score and to create their versions of their score. While you don't need to know the exact meaning of each FICO score, it helps you to know why you have different scores with each bureau. Because as we said, the three bureaus, go and understand why. And then here they have the three bureaus here. Sometimes this is hard to understand, but when you are going for auto loan, they use if they are using Experian, the FICO score, they use a score of 8 and 2, but these are the things that you can learn more and understand them. So the auto loan, the credit card, the mortgage loans, they don't use similar. Even with the same companies, they use different styles. So 8 means something, 2 means something, 3 means something. When you come to TransUnion, they use 8 and 4. You see, Experian is 8, 2, and 3. So your score comes to 726, and this one with credit card 723, and with mortgage 738. So this is the version of how the credit bureaus determine when you go to apply for auto loan, credit card, or mortgage. So it's this system they use. Then we have Vantage Score. This is another one. This was created in 2006 as an alternative to FICO Score. So better for new credit users using as little as 1 month of history, which means if you get a credit score and the credit bureau, you have a credit card for 2 months, and then because they report, so the 3 bureaus will use different credit, either the FICO or the Vantage score. So if, say for example, it's Experian rates it differently and TransUnion rates it differently. When you run, you have 2 different figures. Like I have 700 and the other one I have 600 and something. Why? Because of these 2 models that they use, Vantage score and FICO score. So you better for new users, as I told you. Vantage is better for new users because it reports faster and quicker, and it depends on which credit bureau will determine whatever you are going to apply. And then the same range and a similar weighing scale as FICO score. They have the same range and the weight is the same because credit runs from 300 to 850. 300 is the worst, 850 is the best. If you can get yourself close to 700, 800, you are the master of your managing your finances. So Vantage score is payment history and credit utilization are still the most important factor. Age of credit, credit diversity, and new credit are less important factors. So most still use FICO score. Most companies still use FICO score, but Vantage score is a little newer than FICO, and it's a little flexible than FICO. Benefits of good credit. If your credit is good, you are at peace. You walk to the store, you wanna apply for something on credit, you get it cheaper and quicker. So better apartments, cheaper home loans, better utility rates, nicer amenities. When you have good credit, it speaks for you. You're not going to start, oh, I'm good in managing money, I make this much, make your credit first. That will speak for you. So you want to live in a nice neighborhood, you go, they run your credit, they say, perfect. Yeah, you get approved, come. But if your credit is, they will say, no. Sorry, we decline, and you move on. And while you are doing that, you are affecting your credit. So better work your credit to the best level before you can go to apply something that needs to run your credit. So more advantages, nicer car and more affordable rates, more affordable cell phone plans, credit card with perks, fewer and lower deposits, financial well-being, less stress about money, better job prospects. Even the jobs in this country, they run your credit. If you have finished your school and you ask for school loans, and you don't pay and you have dumped the school loans, now you have your degree, you are going to look for a job, they will run for your credit and say, let's see. Okay. They have reported to the credit bureau that you don't pay money and it's bad. It affects, you can't get a job. So more financial security and better insurance rates. If you insurance is actually the umbrella of everything here. You go, you have a car, you bought a car, you need insurance, you go apply for insurance, they say, oh, no, your credit is bad. They will balloon that payment and they say, like, when I did that, actually, if I can take you back, when I misused the 3 credit cards and I had gotten a car, now I got, like, you get a car with somebody co-signs for you, and then you get a car because you didn't have credit or you had bad credit. And then once you have that car, now you are driving, enjoying, and the insurance is on them, and the payments are reflecting on them. And they are trying to help you. They are trying to help you. But then you think it's a right, and then, or it's like you don't care. You have to care. So, and then they said, the people who co-signed for me, they said, hey, because they thought I'm messing them more. They said, hey, now I need to drop you. They dropped me, everything. They dropped the insurance, they dropped the payment, and now let me reapply this because I already have the car. They could not take it back. But what they did, they gave me higher payments. I went to the insurance company, and the insurance company gave me like what I was paying for the car. They wanted to give me more than what I was paying for the car. And I said, what? Huh? No. But in really sense, you are not going to drive that car if it's not insured. So you have to take the pain. So I took the pain, I did that, and then that's how I learned all these things. So credit myth and debunked. So a myth and a truth. Checking my credit score hurts my credit score. The truth is, you can check your credit score for free anytime without impacting your score. There are those free checks. And every month, they can give you without impacting your credit. I only need to worry about paying my bills on time. Credit score also involves credit utilization, credit mix, credit history, and hard inquiries. The inquiries you make, they affect your credit. So saying I want to pay my bills without taking care of your credit is wrong. Carrying a balance helps boost my credit score. No. Paying off your balances each month will better your score than accumulating those payments. And closing an older credit card with higher interest rate will help my score. No. Closing an older credit card will shorten your credit history because now the longest you had, you have closed it, you have to start from here. Because that is closed, they won't look at it. And then opening a new retail credit card helps my score. No, the truth is opening a new credit card will generate a hard inquiry that affects your score. And then it hurts my credit score to comparison shop for a mortgage, auto, or a student loan. Interest rates for the same loan can be compared over time without impacting your credit. Because if you have a mix of credit and how you make your payment, that's what helps your credit. Selecting credit while using your credit, your debit card, like your bank card, and then you select credit for a purchase is a good for your credit score. No, selecting credit when you're using a check card, a bank card, that is only with that, with your debit card, it doesn't actually involve borrowing. This transaction still comes directly from your bank account and therefore don't impact your credit score. Your check card, your bank card does not affect your credit score. Credit reports are always accurate. Check your credit report regularly for errors. Sometimes they are never accurate. There is identity theft that can add something that you don't know to your credit. So check and make sure that anything that is there, you know it. If you don't know it, you can contest it to be cleaned and removed from your credit. So, 9 strategies to improve your credit score. Pay your credit card balance strategically. Ask for higher credit limit if you feel you need it. Become an authorized user. Like an authorized user means when my daughter turned 14, I added her to my credit card. And I put a portion of the money into that card. Now she was authorized to use that. And I asked her, use, pay. Use, pay. Use this to gas your car. Use this to buy your personal stuff that you need for your beauty and stuff. But as soon as you use, you pay. In a way, I was training her. This is how you start building your credit. She was a good student. She finished. It built her credit to above 700 score. And then when she turned 18, she told me, I can have my own credit. And I told her, keep the concept. Use, pay. Use, pay. Don't hurt your credit because it's attached to your social security number. So take care of your social security number. And she has been a good girl. I love her. I love that girl. So pay your bills on time. Yeah, if you have any bill, pay it. Dispute credit report errors. If you have an error you think, go dispute. Don't let it sit there. It will be removed. If you don't know it, you don't know it. It's not you. Somebody must have messed and tampered your credit and then it's there. It will be removed. Deal with accounts that have gone to collection agencies quickly. Don't even wait your accounts to be sent to collection agents because when you start dealing with them, more stress. Use a secured credit card. Get credit for rent and utility payment through Experian Boost. Add to your credit mix. Because the moment you get a credit and you use it and you pay it, automatically it's reported to the credit bureau and it reflects there. Once it reflects there, they keep a record. This month, she was raised 30 days. He was raised 60 days. You're messed up. Okay, protecting your information too. So what is a credit freeze? So sometimes there's identity theft, which can cost you your credit. So we say freeze your credit. Credit freeze is a tool designed to protect you from fraud and identity theft. It prevents cyber criminal from assuming your identity and taking out loans or opening new accounts in your name. This proactive step shields you from financial loss if an identity thief gets access to your personal information. If, for example, you lose, like I can give an example, I lost my documents when I moved to Washington State. Actually, not I lost. I moved the same day I got here. Everything was in the car. The following day, there was a party for the Kenyans. I drove with all my documents in there, parked somewhere, and then somebody came and broke the car window and went with my bag, and everything was in there. Everything. My life was in there. My kids' life was in there. I had to start from scratch. That is when I learned on how what you can do. And I knew that you can freeze your credit because the people who stole, they can go start using. Of course, I lost a lot of money, but they cannot keep on damaging. They can only have access to what they have. So freeze your credit if you feel something is not right. And once you do the freezing, you can go, if you have the cards, you can go, turn them on, off. Turn them on, off. When you want to buy something, and freeze, and then freeze. Because freezing does not affect the growth of your credit. So so I wanted to dwell here because it happened to me. So the danger of data breach is one reason to freeze your credit is if your personal information is exposed in a corporate data breach. In the past, data breaches have leaked millions of social security numbers, birthdays, and credit card details online. People who love to shop online, please check that link if it's secure. Because if you are going to a link that is not secure, all your information is clear text, plain text out there. So make sure that any link you click, it has HTTPS. That's a layer of security to know that the website I'm shopping from, my information is encrypted. But if not, then all the information you put there, you've given it to somebody. So cyber criminals use this information to apply for credit card, loan, or even government benefit under someone else's identity. They don't care. They want to earn, get money, move on, because they are not the actual person. Recent corporate data breaches in 2015, Scottrade data breach exposed 4.6 million customers' information. Imagine, 4.6 million. 2017 Equifax data breach exposed personal information, 147 million people. Their information, their PII information, personal identifiable information, that includes date of birth, address, all this, social security, name, that is PII. It's in the wrong hands. And then in 2019, Capital One, that's another credit company, and I have them. Capital One cybersecurity incident exposed personal information of 100 million individuals. That's huge. So credit freeze. While your credit is frozen, lenders will not be able to access your report. Freezing prevents hard inquiries against your credit. If someone tries to use your credit fraudulently, they will not be able to open new lines of credit in your name. If you are considering applying for a new loan or a credit, you will need to unfreeze your credit before you can be approved, because they can't access your credit. That's the best you can do, and that's what I did when it happened to me. How to freeze your credit, and lifting it is free. It's free. The quickest way to freeze your credit is online through the profile you have with each major credit bureau. But placing a freeze over the phone is also fast. Talk to the credit card companies you have. If you have issue, freeze it. You must contact each credit bureau separately to do this. Mailing a freeze request is the slowest method, and the bureau can take up to 3 business days to freeze your credit after receiving it. Freezing your credit does not affect your credit score. It doesn't affect your credit score. Like the incident that happened to me, it happened like a storm. So I called the police, and then they gave me a report. And then that night I am home calling these banks, calling these major companies that I had credit cards with. And I told them, please, my information is out there. Freeze, 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 freeze. I froze everything. Then I had to go again, start all over. After freezing, you unfroze, you go do one thing, you freeze. That is how I managed through. So you need your social security number, date of birth, and address. This is what I said, the PII, personal identifiable information. This is very, very important information. If somebody gets hold of this information, then they have your whole life. They can do anything. They can even get tickets and go to enjoy and use those cards, and then by the time you know, you are in huge debt, and that comes to you. You have to start cleaning. So you may also need a copy of the passport, driver license, or military ID, copy of tax document, bank statement, or utility. So you may need that when you are freezing your credit. So credit bureau contact information, we have it here. This is Equifax. You can call them and find out whether your credit report is accurate. And you can also request them to send you a free copy, which does not affect your. So we have Equifax, Experian, and TransUnion. That's their information if you need it. What if I have a bad credit? So that is what hurts your score. Check for any errors on your credit report, pay down debts, avoid new hard inquiries. Then credit repair companies, we have credit repair companies here that can help to repair your credit so quick, and then you bring it back to normal and you do the right thing. So credit repair companies can help improve your credit score by finding and disputing mistakes on credit report with the 3 major credit bureaus. They also offer credit assessment, identity theft monitoring, and tools to help you build better credit. You can contact a legitimate credit repair company for help, or try to dispute any mistakes yourself. Sometimes people use money to clean their credit, but you can do it yourself. So credit repair resource. This is free. This is free. You can use this one. They will advise you. They will help you. And you repair your credit if your credit is bad. So, but be aware of credit repair scams. There are so many out there. They can just, all they want is to take your money and they will do nothing. You give them their money, you give them your money, you give them your money, wait 3 months, nothing has changed. Then you call them, they say, oh, now they push it back to you. So, insisting you pay before they help you. Telling you not to contact the credit bureau directly because they know you can do it. So disputing information you believe is accurate. A good financial plan is a roadmap that shows us exactly how the choices we make today will affect our future. This is by Alex von Topel, a CEO of PlanFest. This is very true. And we have citations here that you can use to learn more. What's a FICO score? What's my score? What's my credit score? You can use these are the resources you can use to educate yourself, learn, and get to know how to improve your credit score. It's doable. It's doable and it's manageable. When people's credit score is bad, they think that now I can't do anything. And then they keep on messing it more by running their credit, checking their credit, doing hard inquiries. Hard inquiries affect your credit. Hard inquiries tells the lender that this person here is trying all means, but they don't know how to manage money. So these really secrets of money is the financial literacy program created and provided by First Financial Security and its associates. So the information presented in this financial literacy session is for educational purposes only and the information. So First Financial Security and its affiliates do not provide tax, legal, and accounting advice, while every effort has been made to ensure the accuracy of the information, laws of a particular state, or laws applicable to a specific situation. Actually, this is a disclaimer that this is for educational purposes only. So, and that marks the end of our presentation. Thank you so much for attending.